Anyone who's trying to borrow money to purchase a car, buy a home, or open a line of credit may be familiar with the term Fico score. It essentially determines the likelihood a person will default on a loan. Denver 7 consumer reporter Eric Lufer hooked up with Belco Credit Union to break down what you need to do to get a higher score and lower your risk.
Fico is named for the data analytics company Fair Isaac Corporation that creates the credit score. I talked with our partners over at Belco to go over exactly how your credit score is determined. We start with your payment history. Do you pay bills on time? Second, what you currently owe on loans and credit cards and whether you are using the entire amount available to you. Next, the length of your credit history. Have you been successfully borrowing for a long time, or are you a new borrower? Finally, your credit mix. Is your mix all credit cards or some credit, some loans? A good mix is helpful to your score. A higher score can help you get more competitive rates on loans. So if you want to improve your FICO score, there are some easy ways to do it. First, check your credit report. You can get a free report from each of the 3 major credit bureaus once a year. Look for errors or accounts you don't recognize. If you find an error, you have the right to dispute it with the credit bureau. Get organized, make sure to pay your bills on time, and pay down your debt as best you can. It'll make a difference. A good option is to pick the credit cards with the highest interest rates and tackle those balances first. Knowledge is power. Get familiar with your FICO score and how a good or a bad score can impact your life. I'm Eric Lufer, Denver 7.
Belco has a good resource page to help you learn more about debt payments and consolidation. That's belco.org/money.